don't get all caught up in the daily stuff. It's just, over the longer term, the fundamental arena has shifted. The US, it's formal policy. They're going to devalue the dollar. Rates are going to 1%. Like, you can't own US debt. The trend has started about 15 years ago, and it's just picking up steam right now. It's not going to change anytime soon. Even if, the midterms come, the Republicans start losing seats, the Democrats are coming in. The Democrats, generally spend more than the Republicans. So, the $38 trillion of debt is not going down. It's only going higher. The dollar has been the world's reserve currency for close to 100 years. And that's it, that's the extent of world's reserve currencies has lasted before. Like, I'm not predicting an overnight event and the dollar's going to lose all of its value, but it's just, it just bleeds value every single day. And the US is, at the end run of, the dollar as a world's reserve currency, and people need to prepare for it. And that Monroe Doctrine, where, we'll take care of the Western Hemisphere and China takes care of the Eastern Hemisphere. But, that's moving away from globalism, and that's moving towards regionality. And we're seeing that in currencies too. There's, going to be many regional currencies, including the BRICS currency, and many competitors to the dollar. We're going to have many nations come out with their gold-backed digital tokens backed by their nation's gold, and they're going to trade in their true fundamental metrics. It's just digitalization of the world. It's fragmenting the world instead of bringing it together. We're going to have digital assets. We're going to have digital stocks. We're going to have digital, there's already digital private equity funds, digital real estate. Like, it's a trend that's not going to change anytime soon. You need to own some gold, because in that Bitcoin white paper by Cynthia Loomis, a senator, there's a clause in there. It's like, listen, we're going to revalue gold that's being held on the Treasury's balance sheet at $40 an ounce to the current market price. And we're going to use it to establish, the Bitcoin reserve. And then, I believe gold is going to be revalued on the Treasury's balance sheet at some point. It could be at $10,000. It could be at $20,000. But that's going to offset a lot of the U.S. debt. I think at $20,000, it offsets like 30% of the $38 trillion of debt. And it's just inevitable. You see smoke everywhere. Every time we wake up, every day is like Christmas for gold investment, but it's a train and it's not stopping anytime soon. But I'd say don't try to trade it. Be patient. If you want to make, a good portfolio for yourself, like stick with the Lundins. You got NGEX Exploration, you got Lunar Royalties, and you got Lundin Gold, and throw in Lundin Mining if you want to, and just put them away in your portfolio and forget about it.
For disclosure purposes, our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site or this podcast should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. This podcast is for entertainment purposes only. Garrett, it's great to have you back on the show. It's been a while since we last chatted. So first off, I'd love for you to just go over your background in the precious metals space and how people can connect with you to start us off.
Yeah, Cali, absolutely. Nice to see you again. I'm from the Boston financial community. Got my MBA from Babson College up there. I'm a CFA, CMT, and I've always been acclimated towards gold. So, I reached out to some people and I started working with John Duty down here in Florida. And then from there, worked with Stansberry Research and, Gold Stock Analyst. And then I went out on my own 3 years ago. And so far, so good. And my website, goldenportfolio.com.
So we're going to start with silver first because that feels like the craziest stories coming out. Do you want to give a little commentary? Obviously, CME yesterday with
Yeah.
technical issues. We have a
Yeah.
big day for silver today.
I do a lot of fundamental analysis, but, in between writing research reports, I trade silver futures occasionally. I'm very attuned to the market. And then at 1 o'clock yesterday, it stopped trading. It was like the price just flatlined, and it was like, what is going on? So, you look around your news sources, and then it started floating around Twitter, and then the COMEX started posting stuff. They paused trading for the metals contracts and for natural gas. Last time this happened was right before Thanksgiving, when silver, it was spiking up, going to 80, going to 82, going to 83, and that was all the China stuff, and it was making all-time new highs. and then they just shut it down. They said the servers overheated or something like that. And then the following weeks after that, silver ended up blowing off like 20, 30, $40 to a peak. So, I don't know. A lot of people like to draw inferences from here that the COMEX is having trouble with delivery. The March contract shutting off. They're rolling to the May. They're having trouble filling their obligations. That's why they put the pause in trading. But I don't know. I don't know. And the thing that's ironic is right when trading started up again, silver's traded down like $1, 50, $2 right from that point. So I don't know. I see a lot of commitment to trader stuff, and people like to read into it a lot. It's kind of some of the only hard data we have regarding the gold and silver market. And people just read into it too much. The commitment of traders, it's longer term, the managed money and the swaps and the leverage dealers. It helps over longer terms, over months, but over days it doesn't really help. But a lot of people are jumping on board. There's some, fundamental guys that have been denying that there's a silver short squeeze, that, there's plenty of supply out there. But a few of them are starting to change their mind recently due to, what's going on at the COMEX. And there's no doubt there's a rush on for physical silver. So to be honest with you, yeah, it's a trend. The World Silver Survey comes out every year. Silver's in a net supply deficit of over, I think it's like 100 million ounces, and the world silver production is only 800 million ounces, and it's been in a deficit for 5 or 6 years. And you get Chinese solar demand. Each solar panel uses a third of a gram of silver, and we've known this for some time. But if you look at the charts of solar growth over the next 5, 10 years, it's going exponential. It's going 5x, 10x, and there's just not enough silver to go around. So it's definitely interesting times for silver. And then one of the other things too is when silver had its blow off top back in January, we trade up to 120. Now it traded back down to 70, and now it's trading at 88. 88's a good number. Like the silver producers are, making really good money. The all-in sustaining cost, has risen when inflation pushes gold and silver higher, mining costs follow. But the margins are extremely healthy. And then, I'm looking at, I follow all the silver miners, and I've been following Core and Hecla for years and decades. And Core and Hecla, they've made 200 mil, back down to zero, made 200, made 500 mil, back down to zero. And it's been in a small channel. Now, Core and Hecla, they're making $2 billion, $3 billion a year. Like, we're in different times right here. And it's supported by prices, it's supported by, the strong physical demand, and it's supported by the investor interest.
I agree that silver is probably in a great place around that 88, $90. I know a lot of silver people won't feel happy hearing that. And I don't know if the CME yesterday helped with any of their conspiracy theories of how they go. Do you think like the gold to silver ratio still applies in this market as like the fundamentals have changed so much in the last couple of years?
Yeah, it does. But, some people look back, they go back to like the 1800s, and they go back to 15 to 1. And, when a dollar was what, 13 grams of silver or something like that. That's like too far. I run a regression, which is basically a gold silver ratio. I forecast a silver price based off the price of gold. And I run a regression off daily prices back to 1971. And silver reached an overvalued state when it blew off to $120. But now, it's settling back in line. So it's kind of a modified gold silver ratio. I haven't looked at it over the past day or so, like with the price of silver at 88, where gold currently is at. The fair silver price. Yeah, the fair silver price is around $70 based off the current gold price today. So, silver's trading a little bit above it. It's long-term trends. It's not something to make day trades over. Let's put it that way.
Obviously, this is the beginning of a bull market for commodities. A lot of people are talking about this is just the start. Are are you looking, or like how would you explain for some of the new investors that are coming in, especially on the silver space, um, that it's more of a speculation, but as far as silver stocks, like you just mentioned, the margins with silver at $80, $70, even $60, there's huge margins to be made for some of the silver stocks out there.
I'm honestly having trouble getting my mind around it because, I followed these companies for decades and a lot of them were uninvestable. And now with the higher price of silver, they're gushing cash. America, the Tonopah district in Arizona was a big silver producer in the 1800s. And, it hasn't done anything in, over whatever, 100 years. But now with the critical minerals, all these projects are coming back online. And even if they have environmental trouble, they might be dead money for 20 years, but all of a sudden they get fast tracked and, they get their permits in a week. But the thing that's interesting is a lot of these miners that were back and forth between you making a little bit and break even are now gushing cash, and you can value these things on a free cash flow metric, using the current silver price, and that's the best way to value and evaluate miners that are in production. You try to get as much profits as you can for each share that you buy.
Full prices are fantastic right now. Do you want to talk a little bit about what you're seeing and what you kind of project for the next, whether that's into the summer for gold, and then what you're looking at, especially in the gold stocks?
Fundamentally, we have stuff fundamentally going on right now that's never happened before. China's walked away from buying U.S. debt. The BRICS have walked away from buying U.S. debt. The BRICS have formed a currency called the unit that's going to be 25% backed by gold. I was in Beaver Creek in the fall and I was talking to Fred Bell, the CEO of Elemental Royalties. And Fred's like, Garrett, he's like, you got to meet this guy. And it was Juan Sartori. Juan Sartori is head of business development at Tether. And Juan Sartori told me Tether's buying, 2 tons of gold per week in their Tether Gold token. And now they are like the second or third leading gold buyer in the world. And they are, I think 13th or 14th as far as treasury buyers in the entire world. So it's an amazing thing that's going on. And my line is, I like to say the combination of gold, the world's best historic value for 1,000 years, combined with cryptos, instant transfer and frictionless exchange, it makes the ultimate currency. And the hit on gold people was, so what are you going to do? Take your bar of gold, and shave some off, and go pay for a beer? It's like, no, I got Tether Gold, and I owe you $5, and that's worth 0.00125 of Tether Gold, and here you go. And then Juan Sartori told me, he goes, listen, Tether dollars got $300 billion in it, and Tether Gold only has got about $300 million in it. He goes, Tether Gold is going to be bigger than Tether dollar. Why? Because crypto holders, they don't want dollars in any form. They want gold, and they're coming to gold. A lot of crypto holders. The thing about the stable coins, the Tether dollar, it's pegged to a dollar, right? But there's no interest paid on it, right? So it's just return free risk. That's why Tether makes so much money, because they've got $300 billion under management. They make all the interest. And you can look right on Tether Dollar's website and you can see what they're invested in. They're 6% of the portfolio is gold, 5% is Bitcoin. It's probably 10% short-term notes and a lot of longer-term U.S. debt. Now, U.S. is implementing the Genius Act that's going to happen later this year, I think. And they are enabling stablecoins to work within the banking system. So Americans are going to log into Chase and Bank of America, and it's like, all right, do I want to hold my money in a checking account or do I want to own stablecoins? And then immediately, this is like Pandora's box. It's a conduit out of the dollar. The U.S. administration believes that enabling stablecoins is going to provide demand for U.S. debt, and it might initially, but no one's going to stay in Tether Dollar because you don't get any interest for it. They're going to end up Tether Gold, and then there's all these DeFi platforms that you can take your Tether Dollar and Tether Gold and stake it and get 5%, 6%, 8%. It's going to be a bank run. Like money is going to be, once they enable these stablecoins, money is going to be gushing out of U.S. banks, and the government has no idea what they're doing. It's going to be wild, and it all ends with gold.
Do you think with Tether and all these changes, especially like on the fundamentals and central banks buying gold, like I mean they're the number one buyer basically,
Yeah.
but do you think that this will start bringing in more of the generalist investor now? Because we still haven't seen a lot in the
Yeah.
gold space. So do you think all these changes are going to be the impact that brings it forward, or what do you think? we're gonna have to see like six or $10,000 gold before they come in, or
No, I agree with you. We're definitely not seeing investor interest. I look at the market cap of the GLD versus market cap at the SPY, the big S&P ETF, and we're not even close to the prior peak in 2011. Investor assets are not in the sector. Yeah, the crypto demand will definitely help, but it's just basically it's policy right now. The U.S. government is formally going to devalue the dollar. Like Stephen Moran, who wrote the Mar-a-Lago Accord, is on the federal governor's board. And that's his white paper, devalue the dollar in order to make U.S. goods more competitive. So that's policy. And then also, everyone knows all the fights Trump has had with Powell. He wants rates at 1%, trying to bring everything, shoot everything to the moon. And, one of my lines is the Dow could be at 100,000, but a bottle of Coke's going to be $20. Do you know what I mean? Like on paper, everyone's going to be a millionaire, but the dollar's going to lose so much value that, gold's going to skyrocket. Everything's going to skyrocket. And there's major knock-on consequences from that they're not factoring in.
are you looking at different strategies? Obviously, again, with silver being more speculative, and then gold, obviously, as a safe haven. Are you taking profits more in the silver space and holding your gold portfolio, or how are you strategizing in?
I've taken some silver project. There's three silver projects. There's Cordero that was owned by Levon, that now Discovery Metals purchased, and Levon's been around for 30 years and it's never worked. And it's like it's low grade moose pasture. But you know what? At these higher prices, it might be that one point in 50 years of history or 100 years of history that it actually works. And then Highcroft. Highcroft has been blowing off. Highcroft was, it was going crazy during the whole GameStop, the silver squeeze back in, what was it, 2021, all that crazy stuff. And then, it traded up and then it traded down. Highcroft never worked. It's refractory. It needs a lot of processing, which is very expensive. And roasters and stuff. But that stock's been going crazy. When I see those stocks go crazy, I get very wary. So I took some profits and I timed the top pretty well. But ever since then, the gold and silver market's been holding in there like a champ. Yeah, it peaked at 120 and it sold off, but it's still at 88, $90 an ounce. And the silver stocks are holding in there too. It's like it's leading me to believe that we truly are in a new era. These low grade cow pastures that I've overlooked for 20, 30 years are truly, they're going to work at these prices and they're economic. So my mind's shifting. And one of the reasons I know individual investors aren't in the market, because the best gold stock out there, the best gold stock in the world, the best gold mine in the world, it's Lundin Gold. It's Fruta del Norte. It's in Ecuador. It mines at, I don't know, 8 grams per ton. It's extremely profitable. It's gushing cash. They just came out with a dividend policy to distribute 100% of all profits to shareholders. They just announced $1.15 per share per quarter dividend. That is $4.60 per year. That equals like a 6%, 6.5% yield on dividend yield. Like the average gold stock trades at 1% dividend yield. And if you value Lundin Gold at a 1% yield, the share price would have to be $450 per share. So this is obvious to me. I'm looking at it. I'm looking at a company gushing cash, and investors they're not making a big deal out of it, and they don't see it yet, but they will, and they should. And then the other thing is, the Buffett indicator. The Buffett indicator is at an all-time high. The Buffett indicator reached a high in 1980, 2000. Now it's at an all-time high now, and it hasn't even started to turn it down yet. The Buffett indicator shows the market cap of the Wilshire 5000 versus underlying U.S. GDP. And when the equity value rises too high, it becomes overvalued. And that's where Buffett raises cash. But what that also shows is it's a measure of the cyclical shift between overpriced growth and cyclical real assets. And last time the Buffett indicator got this high, in 2000, gold went on a 10-year run. 1970, actually, gold went on a 10-year run. And right now, the Buffett indicator hasn't even started turning down yet. So, as the tech sector, as these overpriced companies are squeezed, people are going to have to start looking elsewhere for performance. And gold was a place to be last year. And you get a lot of fundamental guys where all they care about is, the fundamentals and the free cash flow. And the miners are gushing cash right now. So they're going to be coming into the sector whether they like it or not, because that's the only value to be had in this market.
When we talked last time on the podcast, you talked a lot about royalties. Do you want to just reiterate for people that missed that podcast why you like royalties so much and obviously the margins on that?
Yeah, royalties are the best way to invest in gold. I've been following the industry for 20 years. I'm like, goddamn, what if you just made a royalty portfolio? How you have done? You'd be up like 40,000%. It's 36% of your CAGR. It's better than Buffett. It's better than the S&P, even with dividends reinvested. It's the best way. It could be the best equity portfolio of all time. And royalties, there's a reason why they perform so well. Why? Because they have fixed costs. They pay whatever, 100 mil, 200 mil, maybe a bill that Wheaton just did for a stream, and their costs never change. The miners, what happens is the gold price goes up, then the costs kind of catch up, and then the gold price goes down, and then the margins collapse. So miners, they didn't do anything for 20 years. Now they're with the higher price of gold, they're finally moving, but royalties are able to drive accretive growth, through the whole up and down portion of the cycle. Royalties are only run by 4 or 5 people: geologist, accountant, a lawyer, a CEO, whatever. Miners, you need hundreds and hundreds and thousands of miners. All the smaller royalties, they all get bought out. I've seen about 20 acquisitions over the past, I don't know, 15 years. I've had 3 that got acquired last year. If any smaller royalty has a good asset, gets snatched up by one of the larger royalties. In my mind, it's the best way to invest in gold, and I call it's boring. I say it is, it's like watching paint dry, but it's 24 karat gold paint.
As we've talked, you said that like you're looking at different deal flow because of the prices now with silver and gold, that some of the older projects even make sense. What is your criteria for like your baseline? And then have you added anything new to your criteria, like I said, as the prices have changed?
The thing that's interesting is, as I'm going through, I'm starting to update my target gold price, and I'm using the current. I'm using 5,000, and when I update, my fundamental tables for with the $5,000 gold price, the NAV and the economics shoot to the moon. So even though there's a lot of stocks that are companies that are up 2x, 3x, 5x, 6x, 8x, like sometimes they're more undervalued now than they were back when gold was at $3,000 an ounce, because the stock price is not keeping up with the amount of value that's being driven by the gold price in their underlying project. So, for me, it's always, how much profits can I buy for, per share? And I try to buy dollars for dimes. So, there's always opportunity out there, like, with Lundin Mining or Lundin Gold right now. So, it's kind of a moving scale, but yeah, it is interesting what's going on in the market and the higher price of gold and the higher price of silver. It's really changing everything.
Looking more at US jurisdictions now, as far as if you're looking for a discovery project, or is that
Yeah.
like
I shifted a couple positions due to this, and I just added a royalty 3 weeks ago because they had a 1% NSR on this on Spring Valley, and Spring Valley has been dead for years, and all of a sudden it got fast tracked, and it got permitted overnight. Triple Flag that came in and just acquired Sailfish's royalty on Spring Valley, and it happened in like 3 weeks. I'm like, holy shit! They didn't get the price that I wanted, but still, just the pace of the deal flow and the activity in the sector is staggering. One thing that's interesting is, the majors have been paring back their balance sheets for 20 years, since 2011, and they're just casting off assets. They haven't even started acquiring yet, but there's so much value in their underlying assets, like Discovery Silver purchased one of, I think, Newmont's assets. There's another one that Newmont cast off. It's Coffee Deposit. I forget the name of the company, but they just came out with a feasibility, and it's like $3 billion. And just the majors, they weren't able to maximize the value. They're managing too many mines. But you split these mines off and you start giving them the individual operators, and just the value creation is staggering at this gold price. It's to be honest with you, it's hard to keep up with.
when you're looking at new deal flow, what are like the three things that you pay attention to? Last time we talked about share structure is grade. Obviously, grade is usually king. Is that like the second thing that you look at when it's not a royalty-based company?
Number one thing's grade. It's grade in people. You could invest in a miner, and the miner could make whatever $2 billion in a year. But if they're overpaid management and they do too much investment banking deals or unaccretive acquisitions, or they have too much debt, then management get rich, and along with the bankers and shareholders get screwed. So you can have a company that has an extremely good project and extremely good operations, and they don't take care of shareholders. And I've been able to I've got a pretty good feel for this over the years. So you need to stick with the proven operators, the ones that own a significant amount of shares in their projects that are, shareholder aligned. And, goddamn, the Lundin family, Lundin Mining, Lundin Gold, NGEx Minerals, and then Lunar. They just spit off Lunar. NGEx, if you were a shareholder in NGEx, they spun off shares at a 0.25 to 1 ratio of Lunar Royalties. Lunar Royalties owns a 1% NSR on Lunahuasi, which is probably the world's best upcoming gold project, and a 2% NSR on Los Helados. And then Lunar just did a deal with Lundin Gold on Fruta del Norte to buy all their silver production. I think they paid 600 mil, but they paid 600 mil in shares. So Lundin's getting 650 million shares of Lunar Royalties, and they another 0.025 per share dividend for Lundin Gold holders of Lunar Royalties. And companies don't have to do that. A lot of companies will sell projects and they will hold on to the shares. They'll hold on to the cash, and they don't distribute it to shareholders. They just use it so that management can get rich. But I've never seen value creation like this over the years. NGEx Minerals, what was it? It was Vicuna that just came up with their feasibility. It's a combination of Jose Maria and Filo del Sol. It's like $9 billion. It's a big copper project. It's probably going to be the world's largest copper producer. It's probably going to be the world's largest gold producer, and it's probably going to be the world's largest silver producer. And NGEx spun that out. NGEx spun out Filo del Sol, and they also spun out Jose Maria. And then Lundin Mining ended up acquiring it, and BHP is doing a 50-50 JV with Lundin Mining to develop this Vicuna mine. And if you count all those share distributions into NGEx's share price performance, which has done great, it's probably like 600% in 3 years. The returns are in like 10,000s of percent. So I stick with the value creators. Let's put it that way.
Excellent answer. As far as getting for investors to get to know your portfolio, tell us about, I'm assuming last year was a very good year for the portfolio that you run. How many, how much percentage gains did you have? And I guess where are you guys at starting this
Yeah,
year?
my GPIV portfolio, it's the one to get people in the door. That one's up over 1,000% in 2 years. Well, 2 years and whatever, 2 months, 1,000%. I've had three acquisitions. Longcore got acquired, Origin got acquired. I also have a royalty portfolio, that's done great. And I have a GP10X, smaller explorers and developers in the troughs of the Lassonde curve, that exploration trough and that financing trough. And then thing that's interesting about the mining industry is miners are worth the most at first production, right? Because at first production, NAV market cap should rise to meet NAV, the total value of the gold produced over the life of mine, and then they start mining, and the ore reserves drop, right? So then it loses value every year till the mine is depleted in 10 years, and so yeah. They do exploration, they add reserves. So, mine lives tend to, they start at 10 and they just extend 11, 12 to 20 years. But still, it's an interesting metric that, I keep a really close eye on because, one of the companies I've liked for a while, Rio 2, they just started production in Phoenix. They started really quickly. They got that thing built quick. Next earnings report, they'll have production. And we saw the stock ramp up, a couple 100%, as the stock began production. And that happens because that shows the project is de-risked. Even though it looks good on paper, there's still a lot of uncertainties. So when you start processing ore and you're able to do it efficiently and it matches expectations, the stock price rises up to close the gap. That's what I'm able to do as an analyst. It's one thing seeing a gap between, what it's worth on paper and then what it's trading for. But to really stick with the guys that know how to operate and that have a high probability of meeting expectations, that's kind of, the secret sauce.
what would you think for investors is something to pay attention to? I mean, obviously things are just changing so quickly. Like we said, the fundamentals of the gold market and everything have really changed. What are some key catalysts that you think are worth taking note of as we go forward into this year?
Yeah, don't get all caught up in the daily stuff. It's just, over the longer term, the fundamental arena has shifted. The US, it's formal policy. They're going to devalue the dollar. Rates are going to 1%. Like, you can't own US debt. The trend had started about 15 years ago, and it's just picking up steam right now. It's not going to change anytime soon. Even if, the midterms come, the Republicans start losing seats, the Democrats are coming in. The Democrats, generally spend more than the Republicans. So, the $38 trillion of debt is not going down. It's only going higher. And, the dollar has been the world's reserve currency for whatever, close to 100 years. And, that's the extent of world's reserve currencies has lasted before. Like, I'm not predicting an overnight event and the dollar's going to lose all of its value, but it's just, it just bleeds value every single day. And the US is, at the end run of, the dollar as a world's reserve currency, and people need to prepare for it. And that Monroe Doctrine, where, we'll take care of the Western Hemisphere and China takes care of the Eastern Hemisphere. But, that's moving away from globalism, and that's moving towards, regionality. And we're seeing that in currencies too. There's, going to be many regional currencies, including the BRICS currency, and many competitors to the dollar. We're going to have many nations come out with their gold-backed digital tokens backed by their nation's gold, and they're going to trade in their true fundamental metrics. It's just the digitalization of the world. It's fragmenting the world instead of bringing it together. And they're going full bore into that. Like a company I invested in the seed round, it's called Securitize. They're digitalizing the world's assets. That thing's coming public in a month or so, and it's like a $2 billion valuation. And the New York Stock Exchange and all the exchanges hired them. Like, we're going to have digital assets. We're going to have digital stocks. We're going to have digital, there's already digital private equity funds, digital real estate. Like, it's a trend that's not going to change anytime soon. You need to own some gold, because in that Bitcoin white paper by Cynthia Loomis, the senator, there's a clause in there. It's like, listen, we're going to revalue gold that's being held on the Treasury's balance sheet at $40 an ounce to the current market price. And we're going to use it to establish, the Bitcoin reserve. And then, I believe gold is going to be revalued on the Treasury's balance sheet at some point. It could be at $10,000. It could be at $20,000. But that's going to offset a lot of the U.S. debt. I think at $20,000, it offsets like 30% of the $38 trillion of debt. And it's just inevitable. You see smoke everywhere. Every time we wake up, every day is like Christmas for gold investment, but it's a train and it's not stopping anytime soon. But I'd say don't try to trade it. Be patient. If you want to make, a good portfolio for yourself, like stick with the Lundins. You got NGEX Exploration, you got Lunar Royalties, and you got Lundin Gold, and throw in Lundin Mining if you want to, and just put them away in your portfolio and forget about it.
Garrett, it's fantastic always having you on the show. As we close, can you just again remind investors how they can reach out to you?
Well, I'm on Twitter at Garrett Goggin, and then Golden Portfolio. You can put in your name, your email address, and sign up for my free Secrets of a Mining Analyst, email introduction, and then, check out my products. They've done well.